myself Vaibhav. In today's session of Market Movers, we are going back to the S&P 500, which has been in the bearish turn for most part of this week. And as we are wrapping up the week, I think these bearish tendencies are likely to hold sway, and we will do well to hold on to our short sell positions in today's session. And if you consider the broader picture, the major equity indices in the Asian trading session as well as now during the European trading hours are mostly trading in the red with slight losses. Of course, for the US session yesterday, we saw closing with modest gains, but now I think we are again starting to trade in the bearish territory, and even in today's session, the bears are likely to have the upper hand, and because of that, I would advise to simply sit on the sidelines if you have no positions. Otherwise, you can continue to hold on to short sell trades, and it is damn risky to add new longs considering the fact that the trend is still bearish. If you consider the data docket, we didn't really get many major releases during the Asian trading hours, and for the European trading session, it is almost blank apart from some minor releases coming in for the Euro area. And then, as the US session will start just an hour before that, we will be getting the durable goods orders data for the month of August, and here we are expecting modest increase in terms of month on month after robust rise of 11.2% which was seen in the month of July. Now the economic activity is plateauing after hitting the highs. The recovery is now plateauing, and because of that we are not really likely to see the repeat of July. Rather than that, we can expect modest gains, and even that would be a positive development. Now, moving on to the technical segment, here we will first cover the S&P 500, and then we will move on to the currencies. And here in currency segment, we will be looking at the technical aspects of USD JPY. Let's start with the S&P 500's technical outlook. This is the daily time frame chart for the S&P 500, and after making all-time highs around 3,600, the reversal has been pretty sharp for the S&P 500, and in today's session it is almost trading flat after we saw the recovery starting from the levels close to 3,200. In today's session, I am pretty much bearish on the trajectory of the S&P 500, and as the week is coming to an end, I think the bears might again exert the pressure and push the S&P 500 towards 3,200. And unless and until we see significant move on the upside, we don't really have any reason to believe that turnaround is around the corner. And before that, of course, the consolidation has to take place. So from those technical points, we are seeing the continuation of the bearish trajectory, and on the lower side the next target can be closer to these prior swing lows as well as the 38.2% Fibonacci retracement of this rally starting pretty close to 2200 and extending all the way towards 3600. So we had this tremendous rally more than 50 percentage point, and now here we are looking at the correction phase. So from short to medium term, we have to stay bearish, and we can utilize this first support which provided good support in the first half of this month to now act as the resistance zone. We also have this immediate swing high shaping up pretty close to this first support, the S1 of this month's pivot point series. And right now, we don't really have any major support coming into play till the second support, which is there around 3,165. That's more than 2 percentage point away. So here we have the room for the S&P 500 to move further lower, and I think we will do well to look for fresh opportunities given the fact that both these technical indicators S&P 500's trajectory is being shown in the bearish way. So if you consider the regression curve as well as the pivot point series, both are pointing to the journey downhill, and all we need to do is figure out what are the optimum entry and the exit points, and for that we will have to now rely on this hourly chart where we have the confluence zone of 50 and 100 SMS forming around 3260 level. So here within the price band of around 10 to 15 points we have these both SMAs, and of course the journey, the direction of these SMAs is pointing to the lower side, and on the higher side we also have these immediate swing high. I think this is the price area which can be considered as our immediate stop loss, the marker which will give us an idea whether this is the time to stay in any short trade or whether to get out of that trade and simply sit on the sidelines unless we see the confirmation of the trend change. So here if you are to trade in today's session, I would say that anywhere in the price band of this 3260 to 3275, this consolidation phase, yesterday's highs, these are the areas to look for fresh short sale even in today's session. And we had considered the Nasdaq in yesterday's market mover session, and there the anticipations are holding well, and we are seeing the downward pressure pushing the Nasdaq lower as the European session has got underway. So here now coming on to the currency segment, we will see the USD JPY's technical outlook. For the USD JPY, the turnaround is holding pretty well, and it looks like that the USD JPY has turned the corner, and it is trying to change its direction. But of course, it is running into the short-term resistance zone on the higher side, and after having rallied almost 150 pips, we can indeed expect some sort of correction, and even the longer time frame trajectory is still bearish, but we are more concerned with the short to medium term perspective. So we will see what is happening on the lower time frame charts like 4 hourly. On the lower side now we have the first support of this month's pivot point series around 105, and I feel as long as the USD JPY is able to hold above 105, the trajectory is likely to remain on the bullish side for the medium term, short to medium term. So here we are looking at the continuation of this upward trajectory and any move towards 106. But for these months, we don't really have many days left, maybe 2, 3 trading sessions next week. But apart from that, we are headed closer for the closure of the month. So before that, I think the USD JPY is more likely to spend its time in consolidation phase in between these first support and the central pivot point of this month's pivot point series. Now the price action has also entered into the upper band of this regression curve, and that is likely to flatten this downward sloping regression curve to some extent. So moving on to the today's session, I think we can continue to bet on this near-term bullish trajectory, but given the fact that we have already seen substantial move on the higher side, it would be prudent to say that it's better to simply sit on the sidelines till we see some sort of correction pushing the USD JPY toward this 200 SMA level. This is the strong support area for the, pardon me, this is the strong support area for USD JPY, and unless and until there is a significant break below this immediate swing low, we can continue to hold on to our bullish stance in the USD JPY. So here we are looking at the continuation of the uptrend, but though we have already seen the USD JPY rebounding fairly well after getting close to 105.20, but if we want the risk reward ratio to be lot better, and if we want the safety and the clear cut exit point in case we happen to be wrong, then I think this is the price level to watch out for. So here we are trading almost 40 to 45 pips away from this our desired entry point, but that might result in waiting for the price action to move to the favorable zone. But I think it's going to be worth it as today is the Friday session, and because of that we will not really have many trading hours left by the time we decide to go for the fresh long position. So because of that also I would suggest that if you see some sort of correction taking place, then allow it to dip towards the 200 SMA levels. If not, if we see the flat to positive price action in USD, then I think it will be better to let it go and simply stay back and wait it out for the next time's move on the lower side. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and the weekend. See you on Monday. Goodbye.